those that have failed. But, we have to take a bit of a more medium-term view on all of this, because from one quarter to one quarter, things can change. And we think that where you need to really focus on those resilient sectors that will grow no matter what as the global economy slows down.
And Geraldine, where do you put technology in the mix? Clearly, technology is such a beaten-up sector, but a lot of people say just because it's cheap, that's not enough. And a lot will depend, perhaps, on your assumptions around the Fed. We'll get to the Fed shortly, but where do you see tech moving?
Well, we think that tech has suffered a lot. Of course, there's one part that's very linked to consumer discretionary, which has suffered enormously. But when we look at valuation and we look at the secular underpin of a lot of these companies, they're starting to look attractive, especially in the hardware like semiconductors, where we're still seeing very good results, where we see, lots more robotization, electrification of the world that will require a lot more semiconductors. So we think that this one could be attractive. So, it's a question of looking for those companies with attractive valuation and very resilient balance sheet.
Yeah, with that in mind, I mean, we don't seem to be able to make enough chips for the purposes we want to employ them right now, Geraldine. Just looking at some of the numbers like Stellantis saying they're going to see chip shortages continuing to the end of the year. How much opportunity is there to scale up chip production then, do you think?
Well, we think that things are going to eventually get better. The shortages of chips are improving. But at the same time, we know that our economy and all the devices that are surrounding us, and especially electrification and moving to electric vehicles and a number of these applications, mean that the quantity of semiconductors we're needing are going to multiply, in a biblical fashion. So this means that those companies have very good years ahead of them. There is, of course, a downturn in the cycle, but it's not to say that pricing power or the edge that they have and the concentration of the industry is not going to be a good omen for them going forward. And let's not forget, we also just had the Senate in the US passing on the chip bill, which will be a lot more subsidy for the industry and a lot more support.
Okay, so a lot more, so it's certainly a focus sector. Have you taken anything away from the earnings stories that you've been paying attention to, Geraldine, around inflation and our expectations for where that goes? Certainly in the consumer side, there seems to have been a message coming through that consumer products, that these companies still have pricing power.
Well, the key issue there is really the companies with high inventories versus those that don't have the high inventories, and the pricing power also, depending if you're a high-end consumer product or low-end consumer product. These are pretty well-known, standardized pattern. That said, they are all very unclear about the second half in general. Very few companies give very firm guidance or very optimistic guidance. The silver lining in all of this is that wages are still good, and the employment situation is still good. But of course, in the fourth quarter, especially in Europe, a household will have to contend with much higher energy bill, and we will see the true effect of the conflict in Europe and the price on gas and oil will have towards the autumn-winter.
Geraldine, thank you. Stay with us. Geraldine Sundstrom, Portfolio Manager for Asset Allocation Strategies at PIMCO, joining us there from Geneva. She stays with us. More on the Fed shortly. Let's take a look at some of the things to watch out for today. At just a few minutes, in just a few minutes, at 10 a.m. UK time. So that is actually more than a few minutes, isn't it? It's 50 minutes from now, so I don't confuse you all. We'll get the latest confidence surveys for the Euro area. Then at 1 p.m, we will have the German CPI reading for July. We're getting some of the component parts, which are starting to build, interestingly, from different regions of Germany. Quickly followed at 1:30 p.m. by some data from the United States, including initial jobless claims, it being Thursday, and those GDP figures. Will we be in a technical recession? And then later, earnings season continues with Apple and Amazon in focus from the tech sector. Also Intel, with what Geraldine was just saying in mind, and Pfizer reports also. Some of the big names stateside that are due to report then for you. Coming up, we will focus back in on the US. The US economy is not in a recession. That was the message from Fed Chair Jay Powell as he signaled that more hikes are coming. This is Bloomberg.
back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back. Economics, Finance, Politics. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Let's turn then to the Fed and its bumper 75 bips hike. Chair Jay Powell offered further guidance.
We're strongly committed to returning inflation to our 2% objective. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well. We think it's time to just go to a meeting-by-meeting basis and not provide, the kind of clear guidance that we had provided on the way to neutral.
The Fed's Jerome Powell there. Now, Geraldine Sundstrom still with us, portfolio manager for asset allocation strategies at PIMCO. Geraldine, give us your thoughts then post-Fed. So ongoing increases to come, but more flexibility in the coming months. Have you changed your view at all after last night?
Not really. I think what we're seeing is a Fed that is more relaxed. They reached the neutral stance expeditiously, and now they're going to take it meeting by meeting. They still need a moderately restrictive stance, and therefore they are not entirely finished. And the one thing that Jay Powell has pointed us to was the June SEP, which would mean another 100 basis points of hike by the end of the year. The issue between the market pricing and what the Fed has been telling us comes from for 2023. The market is already looking at cuts pretty early into 2023 when the SEP from the Fed would point to further increase in interest rates. And so the gap looking at the end of 2023 is around 100 basis points, which is quite significant. So the Fed will be taking it meeting by meeting, and we will depend on inflation. That's really what's going to happen.
Okay, so in the near term then, do you think that the market needs to adjust to reflect what the Fed is saying? Or do you think the market holds its ground, confident that the Fed will return to its view?
I suppose the market has confidence. It's been leading the Fed so far in the last few quarters, and still sticks to its gun, at least with the price action we've had so far. Now, of course, we'll have to look at inflation, and if it slows down sufficiently, inflation is going to slow down, but will that be sufficient to ensure that the 2% target is in line? There are things that are looking good, like agricultural prices, oil prices, but on the other hand, we know that measures around wages or rents and shelter tend to be a lot stickier. So it's going to be like a push and pull around inflation, And maybe the market is a little fast in thinking that inflation is going to fall to an extent that will allow the Fed to cut interest rates so fast.
And a lot of the conversation, no doubt, will turn to where we're seeing areas of weakness, and we'll get the GDP data later on today, Geraldine. What are your expectations there, or perhaps more importantly, how significant do you think this data is going to be in shaping future thinking? Because, you know, you can make arguments that this is a technical recession then if we get another negative quarter, or you can say, well, no, just as we heard from Jay Powell, and we're likely to hear from the NBER, say this doesn't seem like a recession because it's not broad-based, because it doesn't include the labor market.
That's very true. We don't think we are necessarily right now in a recession, but the momentum is slowing down, and therefore the probability of recession is rising dramatically as we speak. So I think the Fed is going to look at many things. Of course, the GDP number is going to be very important, in particular looking at consumption pattern, but also at investments. You know, inventories or trade balance and things like this are less likely to be a big impact for the Fed. And then, of course, on Friday, we'll get payroll, we'll get the employment cost index and things like this, which are the other side of inflation, which will be critically important. So very data dependent now for the market, and really looking at every measure around employment, consumption, and also inflation.
Okay, that'll be interesting then. We'll focus in on the payroll story on Friday, as the Fed has told us it's data dependent, and this is something that stands between the economy and recession. Geraldine, thank you very much. Geraldine Sundstrom, Portfolio Manager for Asset Allocation Strategies at PIMCO. Thanks for joining us. Let's get a Bloomberg First Words news update. Top stories we're covering here at Bloomberg. Here's Leanne Gerrans. Good morning, Leanne.
Hi, Anna. Democrats in the US have struck a deal with holdout Senator Joe Manchin on tax, energy, and a climate bill, breaking a deadlock on legislation to enact major parts of President Biden's agenda. The plan raises some $740 billion in revenue over the next decade, with more than $430 billion in spending, and the rest to reduce the deficit. Now, Gazprom has cut natural gas supplies to the EU via the Nord Stream pipeline to about 20% of the route's capacity. That was yesterday. The Russian company says the pipeline needs 5 functioning turbines to run at full capacity, but only one is currently in working condition. Natural gas prices are more than 10 times higher than their usual level for this time of year. And the US Senate has agreed $52 billion in grants and incentives for domestic chip manufacturing. The vote comes after more than a year of debate and marks a major victory for President Joe Biden, whose agenda has largely stalled in the Senate. The legislation is a bid to strengthen US national security interests against future supply chain disruptions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Coming up, Meta missed, and for the first quarter ever, their sales declined. We'll talk tech earnings. That's in focus next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Anna Edwards in for Francine Lacroix in London. Let's focus in on big tech earnings. Meta Platforms, the social media giant that includes Facebook, Instagram and WhatsApp, reported its first ever quarterly sales decline, citing advertisers' shrinking budgets. To combat the slump, the company has tried to rein in costs by slowing hiring. Let us get to Matt Bloxham, who joins us now from Bloomberg Intelligence, and he can talk to us about what we take away from Meta and then help us look ahead. What were the big conclusions?
Yes, I think they talked about shrinking budgets. I think it's probably more that budgets are shifting to other platforms, so particularly TikTok. I think Meta themselves said that they're struggling with their own rival to TikTok, which is called Reels, and getting advertisers to spend against that. And they've also suffered more than most from the ad tracking changes that Apple made, which they'd already flagged last year that would be about a $10 billion headwind for them. So I think, yeah, more about budget shifting rather than shrinking.
Yeah, that's interesting because when we got those numbers from Snap, we didn't know which it would be. Was it going to be across all advertising or was it going to be something that's just ad spend moving from one place to another? So that's interesting. Looking ahead then, we get Apple and we get Amazon. Let's talk about Apple. What do we focus
Apple,
on?
two contrasting stories there. Products and services. So product is iPhones, iPads, all that stuff. So about 3/4 of revenue. That's probably going to shrink, partly due to currency, partly just due to softer demand. Services, about 1/4 of revenue. That's things like Apple TV Plus. That's growing at a rapid rate. So that's going to be the kind of the offset, if you like, to that pressure on their hardware.
Okay.
Amazon, it's three stories. They've got their e-commerce business, which is under pressure.
Yeah.
You've kind of seen there's headwinds from Walmart, for example. But then they've got positive offsets from cloud and from advertising.
Okay, so three things to watch there. Thanks so much, Matt. Matt Bloxham, giving you your briefing you need on tech from Bloomberg Intelligence. Coming up, we will hear from the airline sector, Etihad CEO. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The Fed delivers. The FOMC hikes 75 basis points as expected, with Jay Powell signaling flexibility in deciding how steep future increases will need to be. More tech torments. Meta slides post-market after its first ever revenue decline, while Samsung profit misses on muted chip demand. Attention now turns to Apple and to Amazon. Plus, shelling out. The oil giant posts another record profit and announces a $6 billion buyback for the third quarter. Good morning, everybody. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in for Francine Lacroix here in London. We've had lots of companies reporting today. Let's get you up to date with a few more of these stories because we've got some big moves here on European corporates. Let's start with the hotel sector and Accor. We're going to be speaking to the management of Accor shortly, and that's knocked down by 7.4%. The profit forecasts came in below estimates, so we'll ask the business about why that is the case. Airbus down by 4.8%. They've cut their delivery target, taking it down by around 20 aircraft versus the estimate. Supply chain issues hitting their popular narrow-body aircraft. And Vestas, this, of course, in the turbine business, this in wind power business, and this company sees its share prices surging by 12%. And this is actually typical of across the sector because we saw the US passing that energy bill. Solar stocks are surging. Solar and wind stocks are surging as a result of that. Now, it is earnings galore today with some big names from the worlds of banking, food, drinks and autos all reporting. In total, across the globe, we have companies worth a whopping $9.4 trillion reporting today alone. Let us stick with the earnings story. Etihad Airways posted a record-breaking core operating profit of $296 million for the first half of 2022, despite surging fuel costs and some continuing confusion around travel in a world pulling itself out of lockdown. Let us get to this conversation. Manus Krani is with us in Abu Dhabi, and he is waiting with a special guest. Manus.
Anna, a very good morning to you. Yes, we're at Etihad HQ. Tony Douglas is the CEO, roaring out of COVID, roaring to a record first half profit. Good morning, Tony. Welcome to the show. You christened revenge tourism when you were with me the last time. The numbers speak for themselves. There's a record. Are we going to see full revenge tourism through to the end of this calendar year?
Manus, really appreciate you coming in to share this moment with us this morning. You're right, record numbers for Etihad. This has been 5 years in the making through a transformation program. So for us to be able to post $700 million positive EBITDA, $300 million positive core operating profit is a really important punctuation mark on this journey. And it represents, in the first half of this year, an average of a 75% load factor, But interestingly, the last 2 weeks, we've been in the low 90s, which in aviation speak, were absolutely full. So revenge tourism, it's real.
It's real. You got to get it to 95, 96% to win the trophy. What's the toughest call now as the CEO here? Scale up and add real volume to the fleet, or do you just hold your nerve and go, man, China is not open yet? So where are you?
So I think it's building upon the last point, you know, get onto Etihad.com immediately. And the reason why I say that again, is for August, we are fully booked. For most of September, we're fully booked. So the momentum's building on revenge tourism. And therefore, without China coming online, we're already getting to the stage where our capacity is being fully utilised.
But if China comes back online, and I know it's going to be tepid, first flight in 2 years, have you got the ability to switch on the tap immediately for capacity?
So the important part about this transformation programme was to make sure that what we didn't have was a fleet that was driving the network was commercially driving the fleet. So what we've got now is a high-class problem. The first time we've had a situation like this where the market's coming back strong, what we'll do is we'll build in a very controlled way additional capacity, but only where it's profitable.
Cost of living crisis, I talk to every CEO about inflation. Are we at a crunch point? I have been fleeced on 4 out of the 5 flights that I've had in 15 days, right? I'm at a pain threshold. Customers must be at a pain threshold on prices with the cost of living. Are you seeing any of that yet?
You should have been flying on Etihad, Manus, that's for sure. But I guess, look, the reality is ticket yields are actually holding up. So we're seeing that across the marketplace. Cargo yields are holding up as well. And that's 2 of the principal reasons why we've been able to post such solid numbers. Off the back of 2 years where, frankly, we didn't have any revenues to speak of from passengers, it's the reason why now, for us, it's about building going forward, because pricing will, of course, ease off for sure.
Okay, so you're full to the brim through to the end of September. London, Frankfurt, Paris, these airports have airline problems and airport problems. They are in crisis. You don't have strikes, well, certainly not in this country, but you must have pinch points as well. Let's start, first of all, where's the biggest issue for you? Hiring pilots, hiring staff, getting planes. Which is the pinch point at Etihad?
So I think, as you rightly say, we don't have a problem at Abu Dhabi International Airport, but we are at the moment suffering with our guest experience at many of the European airports, some of the ones that you've already mentioned. And sadly, I can't see that rectifying itself anytime soon. You know, the pandemic, for many of them, it was easy to scale down. Many of these airports are finding it a lot more difficult to scale back up again. But going forward, actually, the point we were discussing slightly earlier, for us, the biggest pinch point is going to be taking more new deliveries from Boeing on 787 Dreamliner and taking the next batch of deliveries on the incredible Airbus A350 to take advantage when China comes off.
We'll get to that in a moment. So your problem about adding routes into London, Gatwick or Heathrow or Frankfurt is that they just can't take any more from you. That's the blockage?
So we actually don't have that problem, to be fair, with any of the European airports. It's more about getting the service standard in terms of on-time performance and guest experience in the European airports. Let's face it, who wants to stand in a queue for an hour and a half? It's simply not good enough.
Are you in full Monty hiring mode?
Simple answer is yes. We've hired over 1,000 new joiners to the Etihad family in recent months. And earlier this week, when I was down in our training centre, I have to share with everybody the absolute energy and excitement to see new people going through training to start a career, a journey in commercial aviation.
Well, that's grand, but are you paying them substantially more money than you did before the pandemic? Are wages up 5%, 10%? What is the uplift to the business in terms of cost?
The simple reality is we're seeing inflation everywhere. It's not really impacting us with the cabin crew and in terms of direct labour in this part of the world. But where we are seeing super inflation is through the aircraft component supply chain. And that's something that's challenging all airlines at the moment.
And that has got a consequence as well when you go to add capacity. I want to circle back to what could happen here. We've got the World Cup coming up. You can invite me later to the box. But Are you going to add a super set of shuttles like they've got down the road? Are you going to fly the flag for Abu Dhabi in terms of adding a huge capacity for World Cup?
So the simple answer is yes. We're going to be putting 6 a day minimum on in terms of World Cup shuttle services. But I guess it links to a broader point.
Yeah.
You know, we've been doing a whole bunch of things differently as a result of the pandemic. So we're, of course, a network carrier. But what we do now is we put, for example, summer specials on. So this year we're flying to Nice for the summer. We're flying to Santorini. We're flying to Crete, Malaga and Zanzibar. You wouldn't have seen an Etihad do that in the past. It's about giving the travelling public what they want in an exciting way, but of course making sure that it's commercially viable.
Can you just do one to Mykonos, preferably on the 17th of September? But we'll talk about that afterwards. Where is the biggest cost? You're in a transformation, you say, but you're keeping a lid on costs. $50 million came out in costs. How tight are you on that?
So cost is the trick to it. So if you track us back over this 5-year journey, that's been the most important thing to get under real control. And when the market came back is the key component to giving us the profits at the moment. The thing that's exercising every airline's chief executive at the moment is oil price, because of course that's the single biggest cost in terms of fuel. And at the moment, there's probably risk in that going forward as well.
How hedged are you?
We're in good shape in terms of hedging, in terms of previous years. We've been able to unwind some of it this year that's taken some of the edge off the surge in oil price. Obviously, we're not going in and hedging at the moment because in our view, the price is already too high.
And in terms of next year, Tony, if I sit down with you, where's going to be the strongest route that adds the biggest punch to that plane?
So I think that will be dependent upon whether China reopens. If it doesn't, it's still going to be London Heathrow. It's still going to be the JFKs. But in anticipation of China reopening, Shanghai and Beijing will be the ones to keep your eye on.
Business class, let's round off with this. Is it full to the max?
Our business class cabin has never been more full in the history of this airline. And I go back, $700 million EBITDA, $300 million core operating profit. A big part of that was out the business cabin.
Grant, well, don't worry, I'll complain to Sir Tim because I can't spend my miles there. Tony Douglas, always great to be welcomed into HQ. We'll see you soon. Keep flying the flag for Abu Dhabi. Tony Douglas, the CEO of Etihad, delivering, it seems, on all fronts, but just not hedging at the moment. Anna, Tom, good morning.
Manus, thank you very much. Very entertaining interview. I wonder how many of those business class travellers are actually on business, though. That's a big question. Coming up on this programme, we'll go from, it's like a travel special here on Bloomberg Surveillance, the early edition today. Let's land the plane and look to hotels. We will discuss Accor's second quarter earnings with the CEO, Sebastian Bazin. He joins us shortly. That is up next. This is Bloomberg.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in for Francine Lacroix in London. Now, a year that began with tailwinds for travel as consumers took revenge on lockdowns by booking trips is now being marred by headwinds from airport chaos. So what does all that mean for hotels? Shares in France's Accor have slumped this morning after its full-year profit guidance missed estimates. Let's talk about this. Joining us now, Sébastien Bazin, the chairman and CEO of Accor. Really great to have you on the program, Sébastien. Thank you so much for coming to talk to us. So let's start with the market's response to your earnings. Is the market missing something? The market seems to have taken a quite negative interpretation of what you put forward today.
Well, it's never a good thing. When the CEO is saying that the market is missing something, that means the CEO has done a lousy job. So what I can tell you is we probably don't have the same definition. We have guidance for the market, which was, I think, 570 million-ish. And we've been saying this morning that we're going to do better than 550. Basically mean that I guess we're probably going to be reaching the 570 or better. So I think it's a question of semantic.
Yes, because the numbers I had in front of me say that you are suggesting EBITDA above 550 and the estimate was 571. Right, so you plot, okay. Okay, so you think there is...
It's going to be superior. We say it's going to be better than 550. So in today's world, I think it was actually probably better than anybody expected. And yes, I'm going to make sure we're going to be beating consensus.
Okay. Let me ask you about the chaos we've seen in other parts of the travel sector. Things no doubt look peaceful and calm and restful at Accor hotels, but they don't look that way when you see images of airports. Is all of that putting people off traveling at all?
Well, it is probably, but it is not that impactful for us because we have the great benefit that I guess we never had before of a very, very significant domestic travel business. And a lot of it actually people are coming from cars, from train, from the neighborhood countries. So yes, and the international travelers, even though they may wait probably a couple hours longer at the airport, I can tell you, go to Paris, go to London, go to Rome, it's full of international tourism. So I'm sorry for the pain, but when they go through the pain, they enjoy a very nice experience while they stay in the Accor hotels. So I wish we can actually ease the process. But it's fine. We're not being impacted by it at all.
Okay, we've seen a lot of we've seen a lot of strength in the US dollar recently, Sébastien. Is that resulting, do you think, in more American travelers going further afield, perhaps coming to Europe and other areas of your global operation?
Yes, it is. We've never seen so many American travelers in tourism here in France, and certainly in the south of France. So they do take benefit of actually a better currency. But this is, at the time they probably scheduled their travel, they did not know of that currency advantage. So it's not the reason why they travel, but it could actually increase the pace of it.
Okay, so something to watch in the future. More broadly then, how are bookings and occupancy rates looking for the summer? Can you update us on that?
Yes, it looks very, very strong. I think we're going to have probably the best summer we ever had in the history of this company. We had a very good months of May or June with positive RevPAR, which is basically better pricing than we ever had for the last 50 years of this company. And we said it double-digit, be it in Dubai, being in Sydney, being in Paris, being in London, even probably more than 20% in Dubai. So the summer looks very, very strong. And what is even more encouraging is the fall, autumn looks also very strong and different mix of travelers, because that is mainly seminar, congress, events. So the business travelers, where the summer will be the leisure travel. But I did not expect so robust summer and so robust, basically, months of October, November, December. So yeah, Accor is back. Hospitality is back. Accor is back. And it's true all over the brand and all over the territories, which again was a bit unexpected. So it's faster, stronger, and all across the globe.
Okay, so those are some important comparisons then, and you say Accor is back. You've mentioned some of the travel trends that you've seen, a little bit more people arriving by train and by car, not necessarily flying, so maybe coming from closer places. What are the other travel trends that you're seeing at this point?
Anna, there's one which we never had before, which is, again, of very great nature, because those are loyal customer, repeat customer base. Those people traveling for 4 days, they leave their home on Thursday midday. They stay with us until Tuesday morning. They work remotely on that Friday and that Monday. So my Sunday night is busy as it's ever been. So it's called staycation now. And it's usually 3 hours away from their home. So they actually do visit their own country, or they go from Nice and they go to Italy. But those are very much recurring, loyal, and they don't go through intermediaries like the OTAs. So it's a better revenue base. And again, people actually discovering places around them that they never thought about discovering. Why? Because they're mixing business activity, ability to work remotely with great Wi-Fi from the Accor Hotel on that Friday and Monday, and returning back to the offices on Tuesday. That business, I think, will stay for a long, long time.
Okay, so that's a new development. I don't think it works in my line of business, but if you install a TV studio, then maybe we can, Sebastian. You're very positive then. It doesn't sound as if you're seeing any early signs of recession weighing on either Europe or your global business.
No, there's two things I'm worried about. One is the labor shortage. I wish we can have actually everybody back at Accor, and we're still missing 10 or 12% of the workforce, and we do everything for people to come back. We're being able to retain those who are still here. And the second thing, which we have to be very cautious about, is the level of inflation. Of course, we have some double-digit inflationary cost, be it IT sector or different tools of Accor, that we have the ability to pass through a lot of it through pricing today. But we are into a fairly fragile geopolitical, economical environment. That being said, under those circumstances, I can tell you, I've never seen so much of a greatest force in people eagerness to travel, eagerness to actually spend more. And Accor is really responding with the best ever experiences for those who do travel, and with the best brands, probably in industry. So yes, I am far more optimistic than what the market reads this morning.
Okay, very optimistic then. You mentioned labor issues, and that is something I wanted to ask you about. You've said previously that the company is missing 10 to 15% of the staff that you had before. Is the sector just going to have to pay more to attract people from either not working or from other industries?
Anna, we've done it. We've been increasing the very low-paid salary by 12 to 15%, which is why we've been retaining most of them. It's not a question of pay, unfortunately. It's a question of sacrifices on people having to accept to, spend overnight, to work late at night, to sacrifice weekends. And a lot of people, you said it yourself, a lot of people are choosing another industry where they have the ability to work remotely. In a hotel, you cannot work remotely. So we need to basically probably seduce the younger generation for them to accept those sacrifices. My instinct, or what I think the solution might be, that people will come back and work in the hotel industry only 2 or 3 days a week, and not what it used to be 5 days a week. You do accept those sacrifices if you do it only on Sunday, Monday, Tuesday, and then you work for another industry the rest of the week. That's likely to be the solution.
Really great to speak to you. Thanks so much for talking to us today. We appreciate it. Sébastien Bazin, the chairman and CEO of Accor. Coming up on this program, the oil giant Shell posts a second consecutive record-breaking quarter. We spoke to the CEO, Ben van Beurden, about the year so far. That conversation, we will bring you more of it next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
What I do see, particularly in Europe, of course, with the very, very high gas prices that we are experiencing at the moment, we see a lot of LNG being bid away from Asia into Europe. But of course, there is limited supply coming on, extra. So there I would see an accelerated transition away from gas into renewables. But that is not something that will happen in a matter of a few quarters. That will take a little bit longer. In the meantime, I think the fundamentals for LNG will remain very, very buoyant for years to come. The energy markets are tight and will remain tight and volatile, I think, not only for the remainder of this year, but also well into next year. Where will it go from here? Let's see. But I'm quite optimistic, both on the energy system as well as the global economy.
That was the Shell CEO, Ben van Beurden, on their back-to-back record-breaking quarters. Let's get to some of the stocks that are on the move substantially today. And let's start with Accor. We just spoke to the CEO of the hotel business. The stock down by 7.5%, actually paring losses just a little bit as we talked to the CEO. He was talking about, so the profit forecast did seem to be perhaps lower than the market had expected, but the CEO saying it shouldn't have been taken that way by the market, that the guidance isn't less than had been the estimate. He also said there's never been so many Americans in the south of France, so it seems as if the strong dollar may continue to encourage more flow in that regard. We've also got Airbus down by 5.7%, cutting their delivery targets, supply chain issues weighing on their popular narrow-body aircraft, and Vestas up by 12.3%. We've seen the US energy bill, that agreement passing, and so as a result, wind and solar stocks are really surging here in Europe, a thing we will pick up in the next program. Now, Bloomberg Surveillance Early Edition continues in the next hour. I'm here in London. Kaylee Lyons in New York. With Kriti Gupta today, Matt Miller is off. We will regroup and bring you the early edition shortly. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think Powell made it clear today that they think that they've reached an important point where monetary policy now is broadly neutral.
Catch-up phase and the phase of getting to neutral is over, and we're in a new phase.
He may not have accomplished as much as he was hoping.
It's a Fed that needs to re-anchor itself, but the real economy is again running ahead of it.
The Fed can't calibrate. They don't have the precision to calibrate the next recession. They can't just say it's going to be a mild recession and all is done. And their worst nightmare is hitting that tripwire.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Fed Chair Jerome Powell signals that more interest rate hikes are on the way, but he's not giving any specific guidance and says the pace of tightening will slow at some point. From big tech to big oil, investors have a lot of earnings reports to consider. Meta disappoints, Shell sets another record, and we'll hear from Apple and Amazon today. And a surprise deal on Capitol Hill. Leading Senate Democrats agree on a tax, energy and climate plan that enacts major parts of President Biden's agenda. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And we seem to have so many earnings, it's hard to keep up here in Europe. I know that this continues through the US session and into next week, but the big overarching theme for markets causing us to rally, at least in the short term, Kaylee, has been the Fed.
Yeah, that decision and Chairman Powell press conference yesterday perceived as dovish by the market. The question is, was it really? Of course, we also have to pay attention to those earnings stories, as well as some breaking headlines we are just getting out of the Asian region, one including China's Politburo is calling for stabilizing the property market, which of course continues to be in turmoil. This is according to the Xinhua news agency, and also China vowing to strive for the, quote, best outcome for second half economic growth. Of course, the growth seen in the first half puts that 5.5% goal looking like it's pretty out of reach. Now, of course, those headlines crossing after the Asian equity session was over, but it was a positive one overall following the gains we saw in the U.S. yesterday off the back of that Fed decision. The MSCI Asia Pacific Index up about 1%, and you saw across asset classes really a bit into the bond market as well as those expectations of aggressive rate hikes from central banks get pulled back a bit. In New Zealand, the 2-year yield down 11 basis points. While it is a broadly weaker dollar story across really all of G10 today, the far and away outperformer actually The Japanese yen, which right now trading around 135.36, is at its strongest level of the month so far. And finally, checking on iron ore as well, you have commodities broadly getting a lift on the idea that the Fed may take things slower from here, but also that property sector expectation that China will be boosting support for that sector, lifting the idea of iron ore demand. So those futures up for a fifth day in a row at more than 6% overnight, now trading just shy of $120 a ton, Creedy.
Yeah, Kaylee, I think what stands out to me is that weaker dollar story, because when you think weaker dollar, at least a year to date, that correlation has been very strong with the stock market. So weaker dollar, stronger stocks. But today, that is not the case. You mentioned the weaker dollar. Take a look what futures are doing. They're down about 0.4%. This makes sense. Remember, yesterday we had a almost over 4% rally in the NASDAQ alone, over 2% in the S&P 500, so it's only natural to pair some gains the next day. But take a look what the 10-year yield is doing. The answer is not much for our radio audience. Even crude, it's kind of bouncing up to close to $100 level, 99 handle on NYMEX crude. Once again, nothing really to write home about. But Bitcoin here, it's interesting. You see it up about 0.9% at the same time that the stock market is actually lower. Anna, there are quite a few cross currents here. No clear narrative just yet in the U.S. session.
Right, absolutely. And the longer we trade here in Europe, the less clarity you get here as well, Chrissy. We've got the European equity market pretty evenly divided right now, not going anywhere in a hurry. We had started out in more positive territory, but as we see that picture on the US futures, that puts a lid on our optimism, I suppose. Another thing putting a lid on optimism is some of the data coming out of the euro area. Economic confidence slumping to the lowest since February 2021. So you add that into what we've seen on the earnings stories, which do look pretty mixed and pretty divergent, and it is a mixed picture for Europe. You can see that Spain is really underperforming today, and we're waiting to hear later about taxes on big oil and big banking, and that is something we'll talk more about a little bit later. I've got a lot of earnings to talk about today, so I thought I'd put them all here on this graphic about how Europe is doing, because some of them are really interesting and could have read across into other US stories later. So Airbus down by nearly 6% today. They brought down their guidance as to how many aircraft they will deliver, just by 20, but that matters when you make big things like aircraft, of course. This in particular on the narrow body side. Barclays, the big bank here in London, down by 1.4%. They managed to beat on a lot of metrics, but a concern around cost, litigation and conduct costs in particular is weighing on the business. Shell up by 1.4%, a second quarter in a row of record profits coming through from the big oil and gas and energy major. A lot of interesting detail coming through in the Shell report today, but the market really trading around those record profits and another big buyback from a business that is really throwing off cash right now. Vestas is up by 12.6%, and Kaylee, this goes right back to a US story. This goes back to one of the headline stories we talked about earlier, and that is to do with that bill passing in the US, in Washington, around climate, and that is lifting energy businesses in the renewable space like Vestas, which makes wind turbines. It's lifting them, and also solar power businesses here in Europe.
Yeah, and you're seeing the same thing reflected in some of those US names in the pre-market trade. We'll have more on that in just a couple of minutes. But first, let's take a look at what is ahead today. President Joe Biden will be speaking with Chinese leader Xi Jinping amid fresh tensions over Taiwan and question marks around whether or not House Speaker Nancy Pelosi will be making a trip there next month. Then the tech earnings continue with Apple and Amazon both reporting after the bell. Plus, we'll get some U.S. GDP data at 8:30 a.m. New York time. This one is going to be closely watched, including by Treasury Secretary Janet Yellen, who will be speaking later this afternoon to discuss the state of the economy, Creedy.
Well, speaking of the state of the economy, we're just coming off of the heels of yet another historic Federal Reserve decision. The Fed has delivered the widely anticipated 75 basis point rate hike and signaled hikes will continue until inflation is clearly heading back down. In a news conference after the decision, Chair Powell discussed the rate path moving forward.
As it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're making now. It's one that we'll make based on the data we see, and we're going to be making decisions meeting by meeting. We think it's time to just go to a meeting by meeting basis and not provide the kind of clear guidance that we had provided on the way to neutral.
Well, Bloomberg's Michael McKee is back with us in New York from Washington yesterday, where, of course, he was covering the Federal Reserve live. Let's start with the forward guidance. We didn't get any, and they've completely discontinued it. How consequential is that?
Well, it could be a trigger for volatility going forward. Now, the Fed, once we start trading the Fed funds rate at the new level today when the Fed steps in, we're going to see them just below the neutral rate. And if they did 75, it would take them into restrictive territory. So the question is, how badly do they think the economy needs that? And we won't know because there's an awful lot of data yet to come out. And you tied sort of the two together. Today, GDP is going to be very important, not for the overall number. It'll get a lot of publicity out there, but for the underlying data about consumer spending, business investment, whether the economy is slowing, and then we get the income and spending and the Fed's favorite indicator of inflation, PCE, tomorrow. And once they go through all those, they'll have a better idea. They would like to have known all those numbers before they made their decisions yesterday.
Yeah, of course, the Fed had to go first when really it probably would like to have gone at the end of this week. But on that GDP data at 8:30 a.m. Eastern time, technical recession, Mike? I mean, are we still hampering down with those definitions?
Everybody is asking me that question. It's a subject of great debate. It's a Wall Street thing and a newspaper kind of thing. It's not an economics thing because we don't know exactly where the data are going to end up. First quarter was negative in this country, but the first quarter gross domestic income was positive, and there's two sides of the same coin. So something's got to change, and there's a feeling that maybe Q1 gets revised up to a positive number. And then we did see some good news yesterday in economic data that suggests maybe the second quarter will be positive, and then it doesn't become an issue. Janet Yellen set out to defend the administration, may not have to.
Okay, Michael, thank you very much. Michael McKee there. A Wall Street and a newspaper thing, he says. Maybe it'll become a political thing, and that's why we hear from Janet Yellen later on. Now, on to tech earnings, and Meta, the social media giant that includes Facebook and Instagram, reported its first ever quarterly sales decline. CEO Mark Zuckerberg spoke in the earnings call yesterday.
We seem to have entered an economic downturn that will have a broad impact on the digital advertising business. And it's always hard to predict how deep or how long these cycles will be, but I'd say that the situation seems worse than it did a quarter ago.
That was Mark Zuckerberg, of course. Matt Bloxham, Bloomberg Intelligence analyst, joins us now. So Mark Zuckerberg, quite convinced, good morning to you, Matt, quite convinced then that this is all part of a broad downturn in advertising. Are you convinced by that argument?
Not yet. I think their issue is more about shifting ad budgets away from the Meta platforms rather than shrinking. I think the shrinking will come, but it's more about things like the ad tracking shifts that Apple made, which has really hit Facebook hard, and also TikTok, which is really eating Instagram's traditional dominance with consumers. So I think those are more the issues right now. But I do agree that that there are bigger headwinds to come for the advertising industry.
Well, Matt, let's push this ahead to what we're going to hear after the closing bells today. Amazon, Apple, these massive macro proxies that are, of course, going to be reporting. What can we expect? What are the triggers here for perhaps another overreaction to the downside?
Yeah, so I think Apple's kind of two stories really there. There's the products, which is about 3/4 of the revenue, iPhone, iPad, which are probably going to shrink, partly for currency headwinds, partly for difficult comps last year, and just slowing spend by consumers on those high-end devices. But then you've got the services business, about 1/4 of the revenues, which is still growing strongly. So that's Apple TV, iCloud Music. So overall, probably flat revenues, maybe slight growth, but very contrasting stories. Amazon, e-commerce headwinds, but growth from cloud and also growth from that advertising business, which overall should, put them in good shape.
All right, Matt Bloxham of Bloomberg Intelligence, thank you so much. A casual 10% of the S&P 500 in just those two companies reporting after the bell today. Now let's turn to Washington. There is a deal that breaks the long deadlock on major parts of President Biden's economic agenda. Democratic Senator Joe Manchin of West Virginia and Senate Majority Leader Chuck Schumer have agreed on a tax, energy, and climate bill. Bloomberg government's reporter Jack Fitzpatrick has the details
traders,
for us. All right, Jack.
Are you ready to trade Bitcoin? I'm placing an order to sell short at 23,017. If you're looking to trade Bitcoin, please place your order at 23,017 and stay with me. We will close this trade together. I will adjust this order. Okay, 23,017 order placed. As soon as we will fill this order, I'll let you know what's going to happen next. Okay, guys, stay safe and I'll speak to you later.
all of the above energy policy kind of measure than your Bernie Sanders proposals. So we'll have to see if Sanders is on board, the progressives are on board. We'll have to see if Kyrsten Sinema gets on board. She didn't necessarily check all of the boxes of this when she talked about the tax measures that she would propose, but it is really a big deal to hear Manchin and Schumer have an outline and actually bill text saying that they have a deal that takes them a big step forward to trying to get this to become law.
And if the response we're seeing in solar and wind businesses here in Europe is anything to go by, this has been a bit of a surprise to the market, so certainly something we'll keep an eye on. Meanwhile, President Biden is set to speak with China's Xi Jinping today. What should we expect from that exchange?
Well, for one, the potential trip by Speaker Nancy Pelosi to Taiwan could come up. That's an issue that has raised tensions very significantly, with warnings coming from China on that. Also, the possibility of discussing lifting tariffs on China is the other main thing to watch for. The White House, when they've talked about this, have downplayed any potential news on something really significant, saying they have a policy of trying to keep the line of communication open with China to avoid any negative surprises. But really, those two main issues of Pelosi potentially visiting Taiwan, which China would not be happy about at all, and the issue of tariffs potentially being lifted are probably the two main things to watch for.
All right, Jack Fitzpatrick of Bloomberg Government, thank you so much for joining us from Washington this morning. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And as Anna and I both mentioned, you are seeing off the back of that news of the climate deal that Joe Manchin and Chuck Schumer have struck, clean energy and solar stocks getting a really nice lift in early hours. Plug Power up about 9 percentage points, First Solar up by more than 7%. And of course, you also have earnings stories out there. One of the more positive ones from after the bell was actually Ford. Profit blowing away expectations. They're really being helped out by higher vehicle prices as well as demand for EVs like that F-150 Lightning. So that stock is up more than 5% before the bell. One more negative story out there, though, is Qualcomm. It, of course, is the biggest chip maker for chips in smartphones, and it gave a weak forecast, citing consumer demand deterioration for mobile devices given the weaker macroeconomic outlook. So that stock down about 4.5% before the bell, Anna.
Yeah, lots of earnings to discuss. It's one of the biggest reporting days of the season, with firms in the US and Europe worth more than $9.4 trillion posting results today. Big tech, big oil, and big autos are all in the mix. Later this hour, the chief executive of Stellantis from the auto sector joins us for an exclusive interview. The dollar is on a tear that has few parallels in modern history. Today's Big Take examines how its ascent has left a trail of devastation. You can read all about that in today's Big Take story on Bloomberg.com or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
earnings season is here.
Buzzwords this earnings season: recession, inflation, foreign exchange, layoffs.
We are starting to see, well, the world get a little bit more cautious about what these earnings are going to look like.
Bloomberg breaks the numbers first.
Second quarter earnings at Delta Airlines missed expectations.
When that inflation print hit, my eyes were on Amazon in particular.
With exclusive expert analysis.
The issue here really is elevated costs.
If you take a look at the projections, that is the story.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. Well, look, we're coming off the heels of a historic rate decision once again, the first back-to-back 75 basis point hikes that we've seen all the way back to the 1980s. But the question is, what's next? And sadly, we don't even have that forward guidance to tell us. But if you look at the pricing here, it's telling us that in our perhaps near